This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech plays in the world today. Okay, let's roll.
So welcome everybody to the episode number 157 of Breaking Bank Europe. And I am Roberto Capodieci, your host, and I have here two amazing guests, two dear friends, all Italian. We're all Italian, but just for you, we're going to speak English during the whole episode. And we have Matteo Rizzi here and Demetrio Migliorati, both experts of banking, finance. And today we're going to discuss the future of banking. There is so much new technology coming up, all this artificial intelligence that we're seeing in these days. There is being a lot of drama on crypto custodian services and companies, and we have the Metaverse that is arriving in every direction in our lives. So we're wondering what is going to happen to banking in the next future. So we're going to discuss this. If you want to introduce yourself very fast, Matteo, and then Demetrio.
So, hey guys, it is great for once, to sort of rest and just be a simple guest. So I don't need to I don't need to remember which episode it is. I don't need to do the blurb, and I'm super happy to sort of witness the first show of my friend Roberto as a host of Breaking Banks Europe. Indeed, also super happy to start the sort of 2023 series with two friends. I don't think there is much to say because my bio is everywhere, and I happen also to be the executive producer of the show. But today I'm just hanging out with friends on a podcast.
Demetrio is from an important Italian bank. He has an amazing role in bringing innovation to banking. So he's the right person also to talk to about the future of banking. Demetrio, you want to introduce yourself very fast?
Well, first of all, it's really a pleasure to stay with a very good friend here and discussing this topic that is, at the moment, one of the most interesting topic we can talk about, because the revolution is going to arrive. And yes, I'm working for a large financial group in Europe, and I'm head of innovation. And in my role, I can see many kind of changes that we are already applying in our bank or the different area of the bank. And we see also a number of peers that are working in the same direction. So, as I say frequently, typically when we spoke about the new changes in the area of the crypto, I think the banks are the one who are going to save the crypto, and that is something. No, that is something, because crypto should be disrupting us. Instead, we are going to use them, and at the end, most probably will be the one giving back the trust to the world stuff.
Yeah, because behind every delicate business like finance, there are always these mysterious regulators, these people that are there to protect the public, but at the same time to do the favor here. It is very difficult, this role. And it's funny because these regulators I will say always, do not catch up to the speed of technology. So they're still regulating how you use the fax to send some messages. I wonder if there are paragraph on telex machines to be used with banks. today in 2023 when technology moved us in a very fast different direction. So it is an interesting thing. I query ChatGPT, which is the artificial intelligence that everybody is using now. They reached, I think, 1 million users in a few minutes since it's been launched. About the future of banking, what does in general the artificial intelligence that is fed by information from the internet, and obviously mobile banking, but mobile banking is not future of banking, is today. Every bank has mobile banking, right? There are digital currencies that can be, as Demetrio was suggesting, something that the regular bank can come in and save. Different means of authentication. There are biometrics or now use of blockchain and the heavy use of artificial intelligence. We have seen a lot of neobanks. They're born. These fintech startups that act as a bank, they're coming up like mushroom after the rains. They are everywhere, and they work in a very different way compared to traditional banking. How you see the role of these neobanks in the future of banking, Demetrio?
All these newcomers, they have a very important role because they are testing new use cases, and they are giving us the direction where the new customer want to be, basically. Most of the time, we see people focusing on the technology itself. We must be much more focused on the behaviors, on changing of the behaviors of the customer, what they're really looking for, what kind of experience they want to have, because they are new customers. They are new generation of customers that are used to have a relationship with the technology that is maybe completely different compared with the customer we have right now, that are already used to use digital banks in a very normal way. We are a bank. We as Banca Mediolanum, we are a bank in which we don't use the distribution channel of the
branches.
Thank you. I was missing the English term. And we distribute through financial advisors. We were a fintech at the beginning. There was not the term, but actually we were a fintech. Introducing the technology to change the way we were serving the customers. Now it's again something that is going to appear as a new change. What the new customer wants. They are used to have an interaction, maybe in a metaverse like way of interact. Well, we will have something like that for them. No, it's inevitable. No, when the new customer arrives and requires a new way of interaction, the only thing a bank can do is to create the channel that is going to serve the customer in the way they want. And because this is the requirement, it's a very basic requirement. So I won't focus expressly only on the technology, because the technology, of course, is the driver. So we have to keep in mind that we must have full domination of the technology. But the real attention, the real focus, what we have to understand and learn is the behavior of the customer. So the request that is coming from the customer. And if you see what they are doing with the new challenger banks, with the newcomers, with the new fintech, you see from them what's going on. And you have enough time to react and to propose your solution and build on the solution on the others. So that's the way. That's the way to understand how the market is changing and how we have to adapt in order to serve better the new customers.
When hopefully regulators have not yet put a stop to a technology because they don't know about it yet. Because I saw that when there is something completely new, it remains a gray area. People jump on it, and then you can do the most strange things in this new found land that nobody knows about, that there are no rules. But if people try to use technology that are a little bit established, then it's going to hit the wall with a lot of regulations that stop them from adopting them in full. Because by the public eyes, by the public point of view, there is some behavior that seems very strange from large financial institutions, from those that need to respect the rule in full. People say, why they don't just do this, right? Why they don't just do that? Because probably behind there are patents on flaws, there are rules that are, there are a lot of aspects that need to be respected to also innovate, right?
There is a complex structure out of all the rules we have to obey. The point is again that when the regulator is going to say something specific on a certain technology, it is because behind that there is the possibility to use the technology in an abnormal way. Making some of the previous rules not working anymore. So, because we need a very strong basement of common rules in which we can work together in a safe way. The rules are there because we want to protect the customers. The real need of these rules, because we want to protect the customers. We want to punish the wrong behaviors. All the mess that we are suffering right now in the crypto areas are depending on the fact that people that can do any kind of scam, they go away unpunished, because there are no rules to punish them. And the fact that they can do this kind of scam in the financial history, we saw all of them. We saw all of them, and now we know how to punish who try to do scam like that. In these new structures, in which there are new same kind of behaviors, same kind of way of giving a carrot to people, and then the carrot is not anymore there. We need rules.
Don't you find it?
In other words, guys, basically tech in banking is interesting until the regulator understands it.
Yeah. Right. That's the
the regulator is understanding until the regulator is able to design the right framework that is going to protect customer working in that area.
Yeah, but understanding it doesn't mean that it's done in the first place. Understanding meaning understand how to indeed put boundaries, right? And before it is exactly what you were saying, guys. So actually, what Roberto was saying in the crypto space, they started doing more or less anything, and maybe now what you said already, Demetrio, banks are going to be the savior of it because by putting some order. The technology behind the crypto space, which is actually the interesting thing about it, might actually be used in the right way. I completely agree.
But I love the model. I really love the model. There are so many things about decentralization that are very good, powerful, and good. The point is that we know the human being, and there are human beings that are taking advantages about the newcomers.
Isn't it funny that Bitcoin was born to take the money away from the bank and to leave them in the hand of the people? So you hold your money and you send your money. What people did, took them and gave them to FTX. to actually making it worse than before, because before at least there was a little bit of regulation and a little bit of control. And now that you got this instrument that you are able to manage by yourself, and then you give it to somebody that is actually even more
even worse than the bank,
regulated than anybody else. And that's very.
Not only that, but I saw a few comments on the social when they say, in the US, like you rob an orange, and you're more sure like stay in jail than FTX CEOs that can be bailed with 250 million, right? It's that's also not the right model that we are giving back to the people, that this world is giving back to the people, right?
He also mentioned the bailout that the
trust.
bankers got in the past. That's the same model in the whole aspect. If you look at it,
we know what 2008 is.
Exactly,
no? We know we suffered it, significantly, but now we know how to protect the world environment about at least this kind of scam. No,
there are
so
different
it's very
aspects.
important
There is
that
regulators.
Here.
Yeah, there are regulators, there is the technology, there is the people behavior, which you were saying correctly. People want innovation and want to have different approach, but at the same time, he has a behavior that is wrong and is still repeating mistakes done in the past. One more reason why they need to be regulators there to protect them, because if people don't learn by their own mistakes, right? And in the meanwhile, there are advances in technology, as we were saying before, in this gray area. There is not regulated. There is a very funny repeating memes in TikTok and the various fast videos that are online now, where in China people pay with biometrics. So you go to McDonald's, and when you're finished with your order, they take your face and deduct the money from your account. And there is the classic scene where the lady places the big order, then pretends something dropped on the floor, bend down, and the guy behind her in queue is the one getting the bill paid, right? So I want to see how regulators sit around the table to try to find a way to protect consumers from this kind of technology. And in fact, interaction between financial institution and the public can take place and gonna take place more and more different places, because if you think most video games now work with value and work with constant interaction fully online. Just go back 10 years and video games are something you download or you purchase and work completely offline. Now nothing works completely offline. Now everything is paid as a service. Even application that we use in the computer, Photoshop in the past was a package I buy and I own, and now is a subscription that I use monthly. Everything inside has additional functionality that I pay per use or I pay per time. And most of these places are also offering financing. So I am actually doing a financial contract to finance a purchase of something from within the application itself, which is an utility application or other things. So there are financial institutions that arrive with their own API, with their own extension inside other application. So my office suite become also a bank a little bit, because allow me to actually do this sort of function. And so in financing purchases rather than in moving money, because now many email providers are allowed to send money with email as well. So are the financial function broken in small pieces, and these small pieces resold or readapted in different places individually? So per se, can the function of a bank that offer a package of services be split in small part, and actually one of these can be sold also by the guy that sell fruit and vegetable downstairs, rather than from the website that do this not as a financial part that belongs to a full package, but just as a single item. I don't know if I explain myself.
Totally. And actually, I think that you gave a very informal and understandable to the masses definition of embedded finance, as simple as that. And I wanted to make a couple of points. One is, if any of you get closer or close to a teenager, I've got like two at home, you see the relationship they have with the money is completely different. I think that we that are more or less in the same, I want to say, age sphere, in the same decade, let's say, we are probably the last generational sort of frontier that still will remember how banking was before. And this banking services need this intergenerational or next generation sort of leap to be fully sort of adopting what you just said, Roberto. So the fact that at the end of the day, financial services will be seamless, and everyone will be using a product or a microfinance product, whether it is in savings, in lending, in paying, that probably, and the bank is probably going still to be the end sort of deposit of it, but the infrastructure that will actually sort of resell the service won't be a financial player anymore.
I'm not that sure. Let me discuss on the point, because we have to.
That's why you are here, buddy. That's great.
Well, because we have to come back what really a bank is. Okay, well, what is the job of a bank?
Demetrio, sorry. I want to say something. You should be actually grateful that I put you in the same generation of Roberto and me, instead of attacking me back and sort of. But it's okay. I love you.
First of all, I'm more than happy because I'm the older. but anyway.
Sorry, joke aside.
I want to come back for 1 second to the real job of a bank. The real job of a bank is assessing risks. What we do the best is to understand the very deep behaviors that are inside a risk. No, we know how to assess it. We know how to study it. We know how to evaluate it. And we know how to price it. So that is our job, to understand the risks that are behind a certain operation everywhere. So when you think to credit, it's not that easy to create a credit infrastructure. You have to know how to assess the risks that are behind it, all the behaviors that are around it, all the mechanisms that are around it, and you have to understand it, and you have to create a price for it. If you want to make credit in this area, in which there are happening these things, in which there are these risks, in which this can happen, that is the cost you have to sustain, and that is the backup you have to have behind your shoulders if you want to sustain a certain volume of these risks. So that is our job, to better understand this. And this is a very complicated issue. So it's not something for you can't just arrive here and do credit like you want. It's not that easy. So what we can sell to others, and I agree with Roberto, it can be really divided in pieces in which you can sell the single component of your experience. Because others, they can need that single component of your experience. You can give that to build a new product where you have been able to assess the risk and to create the right price for the risk. So in that way, I think that yes, the bank can be inside a new flow of services coming from different areas in which inside a certain experience that the customer is doing in a very different stuff, like buying groceries online. During that period in which he is buying groceries online, and I want to divide the payment in 5 because for any reason for them it's important. We can offer something like that. Not need my bank itself, but because maybe it's not our role. Every single bank has his own role, but because of the banking has this knowledge, can be the right partner to create new products and new flows, even for who wants to sell groceries online.
You see, this is what needs to be disrupted, I think, right? This is what technology is going to take away from the financial institutions. I think something, I saw big scare for cryptocurrencies, and that really didn't bother me much because I said, well, banks are much more than money only, so there is nothing that will make the bank a risk. But what is interesting is the centralized finance. And I saw somebody that says it's not the Lambo, that everybody with Bitcoins went to the moon, we buy the Lamborghini, it's not the Lambo story, but I bought the family car just by using a small application where I didn't have to put even who I am. I left as collateral something. I got a loan with a certain interest I approved in 5 minutes, no signing form, no disclosing anything. And I said, look, this guy must have used very complex user interface to access this decentralized finance. But the day somebody like my mom can access this, then the financial institution are going to lose a lot of clients. At least, more you transport and mitigate the risk by mathematics. Obviously, if I go to the bank and they loan me money without me giving any collateral, there's a risk that need to be assessed. But it doesn't really happen often, I think, on the common people. But if I leave a collateral, there is crypto and as a way mathematically to cover my loan and automatically get sold out if the value goes down, then I can actually do an operation in a simple term without having to identify myself that I don't need the bank anymore, right? So is that this part of technology that are going to disrupt banking? Because as soon as there is central bank digital currencies, in theory, from the central bank, which is important to understand, is not a regular bank. The central bank has a particular role, right? It's not an intermediary. People can apply these rules directly with some smart contract, if you want, and do the function of a bank. So anybody can say, I can make you a loan, I have money on the side, I can loan, and people will collateral, you pay me the interest, I'm guaranteed because mathematics guarantee me. Who needs the bank?
Well, you make it particularly simple. And if it was that simple, most probably we will be already disrupted. I don't think it's that simple. First of all, you spoke about the fact that you haven't the need to be identified. If you work with the central bank, you have to be identified. There is no way that you haven't had the proper KYC if you want
there was a particular thing that this guy was mentioning, but okay, let's say there is my KYC, there is my name, this is my money, but the function of mitigating the risk that you were mentioning is done by the fact is that now you work with cryptos like Ethereum or USDC, other crypto like that. It doesn't work with actual money, if you want to call them such, like the fiat currency. But as soon as this is digital and can be processed through mechanics like a smart contract, then a lot of mathematical flow that are actually applied by bank can be applied in a smart contract anyway. So you remove a particular role. I don't know if I'm wrong. I'm not an expert. I'm asking the question.
No, I agree with you. Some of the rules are very basic mathematical rules. So if you can implement that in a smart contract, yes, it is something that can be easy delegated to somebody else. But then that it comes back to responsibility, ownership of the process. Who is owning the process? Who is answering to you if something is going wrong? The real point is that as long as you go with small amount of money and something is going always properly, fine, totally with you. The moment in which something is going wrong, maybe outside of the technology component, but maybe something that is happening in the reality, you need somebody to talk with to solve your problem. And you don't solve your problem with a smart contract. You solve the problem with somebody that is taking care of your needs. And that's why I really love that when you're going to, that they are solving everything with a smart contract. There are a large amount of stuff that you solve with a smart contract. But there are other stuff in which normally you would need to access, a proper service gave by
I am with you there. It become more boutique. Matteo, what's your take?
So, while I was listening to you guys, I was actually thinking that we talk about the future of banking. We are having a very a technical approach, but it sounds probably to certain of the breaking bank auditors like three delusional guys talking in an ivory tower about smart contracts and crypto loans. Whilst most of us they're still like. Oh wow, I need cash. I'm on TransferWise, so let me transfer from TransferWise to Mediolanum so I can go to the ATM or to the branch in Mediolanum and take the money out, or like actually the other way around, let's deposit money in Mediolanum so that then I can do a wire on TransferWise because I can't deposit cash, which is the reason why the our future of banking view only speaks to today, frankly, a minority of the generation. So my thinking is that the speed at which the future of banking is talked about / actually coming and being implemented is always 5 times lower than the capacity of the clients to embrace it.
Mm.
Don't you think?
Yeah, historically, yeah. It was already happened this way. I mean, if I see, I mean, many things have already changed very quickly, very, very quickly during the last 20 years of banking. 20 years ago, it was impossible to think to do a full money transfer, a full European money transfer in 16 seconds. No, it was really a miracle. No, now we do instant money transfer from Spain to Italy, from Spain to Latvia. I mean, it's normal. We pay this way always. No, at a very low cost. I know for an American customer, this is still a miracle, no, because they have to use multiple apps to do that. But in Europe, there is a standard used by all the banks.
In Asia, this is normal since 20 years ago. That's the crazy thing, right?
That's the point. No, that's the point. Now we can do whatever kind of money transfer. Everything is easier. What is not changing is that when you do the big move for your life, when you want to buy a house, no? When you want to access a credit of a certain level, the number of interaction with new services are incredibly thin if compared to what happens with the normal banks, because the people wants to go to somebody and talk with somebody. The reality is that they want to. Not everything is completely clear. They want to understand the process. They want to have somebody to go to and to ask and to be reassured.
Same thing to invest, right, Demetrio? Same thing to invest the money. Same thing.
Same thing. At the end, when you move, the amount of money that is very important for your life is not so frequent that you don't go to somebody to talk with. Of course, I have this perspective that is very Italian, no, that is very strange. No, 86% of the population is owners, 50% is second-hand owners, 50% of the real estate transaction are in cash. No, so without access to the credit. So the perspective of Italy here is very, very, very different, of course. But it's important to keep in mind that it's not only a matter of technology. Technology is it's used frequently when it comes to to normal transactions, the everyday life. Their technology is so immersive. But when it comes to action that are very strong for your life, you need somebody to talk to.
I was one of the cases that we always do, and Demetrio, we were talking about it in the last event last time we met, actually, in Milan, a very talking about possible interaction between the metaverse and banking and financial services. We said, okay, today, if I could, for example, through my interaction with the metaverse, do a true virtual visit of an apartment, the neighborhood, at the same time have all the data, have the historical data, have even an avatar would be good enough, telling me, whatever yield could come from this apartment, etc., etc., etc. Could I possibly buy an apartment without interaction? I am not sure, but it seemed to be a quite reasonable use of this technology.
Yes.
Thing is, we are still very far, technically speaking, from that possibility.
I'm here at the CES right now, and I have just had an experience of this kind yesterday, in which I was basically working with an avatar, an extremely high quality avatar, three-dimensional avatar beside me into. But it was so good, the level of interaction, that it was very close to a human interaction. So in that situation, if that is the operator of the bank that is helping the customer to understand the environment, around the house, understanding the cost of the houses, and so on, I think that kind of interaction is fine. I mean, it's fine. There are people probably that can use it properly, And
I think that the idea is what you're saying is this technology, what you said, opening as well, and you made a good case for it. In closing, we can say that technology is important. Human behavior is what lead in reality the changes, right? I think about this capacity of certain company to be fully remote and have employees working different places. And just do voice calls and sometimes like the Zoom call and work perfectly. Another company that need everybody to be in office and working can be a little bit an analogy with the fact that I can do banking remotely. I can do banking sitting in person with somebody that with me. Is this a generation change of approach, or is this a kind of cultural based on different culture, different places? I don't really know. I saw that as of today, some company really work very well remotely. Some people access services of any sort all remotely without interacting with other people, no problem. I belong to this old generation. I like to see people in person. I like to do meeting in person, and I find them much more fruitful at the end of the day. But the metaverse can mediate these things, as Demetrio were, saying before, and probably this is the direction of technology that is being pushed by Mark Zuckerberg for Meta, where they try to create virtual offices, virtual place of work, because people has the feeling to be in person there and interacting with other humans, and probably the physical distance between me and the bank can be covered by sitting with a VR headset and sitting at the table with an employee of the bank that in the case give me in person all the consulting that I need for my investment or to take a large loan, so that this kind of technology is not replacing but is helping the bank interact with their client in a potential view in the future for the changes, the adoption of new technology in banking.
I was thinking as well that when you think of the semantic of the future of banking, right? It is difficult to discuss it holistically, right? Because the future of banking in Africa it doesn't mean anything close to the future of banking in other region of the world. So maybe, and you were saying kind of the same thing. We were talking about this, right? So it maybe is the future of the way humans will interact with financial services that will be, way more contextual, because of course in Africa today you can't do the same. Often you can digitize the financial services in a much better way because the regulator, the beast, is not as strong. So there is more freedom of this, which actually allowed the M-Pesa of this world in Kenya, to be so popular. And maybe we'll eventually, the Western economies will learn things on too, from African economies. But at the same time, we should maybe talk, but that's for another show, on the future of the different services and the different interactions, like lending or payment or investing or mortgage and so on. Don't you think, guys?
Yeah, I agree. More than the technology itself is the user experience during the different kind of action that are part of the banking environment.
Well, to close, I wanted to thank both of you because I learned new things today, and hearing things from your voices is very important to me because they are very important notions that are gonna make myself more, acculturated in banking, where I am a terrible financial person. But it's been a pleasure having you both as guests, Matteo as a host guest, and Demetrio as please. I'm happy to see you again after Milan, Bali, another occasion that we had met. And to everybody else, stay tuned and connect to the next episode of Breaking Bank Europe. Bye-bye.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with FinTech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.